Hey, welcome back to the Smart Money Bootcamp. My name is OZ from OzFx, and today we're going to be talking about stop runs, stop hunts, liquidity grabs. This is a topic and element of smart money concepts that I feel is often overlooked. Not everybody teaches this, and I understand why some beginners may want to stay away from this type of concept because it can be scary at first, honestly, if you don't know what you're doing. But that's what we got this lesson for, so without further ado, let's get into it. Stop runs are when price goes through an area where obvious stop loss orders are. In order for it to be a stop run, price needs to pierce the said level and pull away quickly. So right here, you see I have stop run illustrated here. Why is this a stop run? Because above these relative equal highs right here, there's stop losses. There's people that were selling here. There's people that want to sell up here when this price gets up here. And then this is when the price just drives through all of these stop losses, taking all of that liquidity before going the other direction. But how can we use this, or is this just for observation? If you're trying to trade a stop run, knowing the trend and the daily bias is a must. Spotting liquidity and understanding how the market works is key to utilizing stop runs. If you try to come into the market and just try to sell in the other direction or buy in the other direction, every time you pierce through a level that you think there might be stop losses at, because in reality, there are stop losses all over the market. Right? So identifying the right ones and when to do this is key. So what are the elements of a stop run? Time and price, number one. Time and price. When certain elements of time and price line up, it creates a lot more confluence to the trade setup. For example, if bearish and the Asia session consolidates, we can look for London to take the Asia highs, forming the high of the day in London, and turn away sharply. This is one way to trade a stop run. When price is in an obvious trending environment, respecting highs and lows, after so long, price will look to break intermediate highs or lows before continuing in the desired trend. This is to shake out traders in the market, taking their money and using it to propel in the desired direction, and I have a diagram drawn up of this that you will see later on. If looking to trade based off of a stop run, an extra confirmation can be when there is an order block or imbalance below an area you are looking at for a stop run to enter off of. If you see a trade setup that looks perfect or too clean, a lot of times it is. Clean setups are mean setups. I'm sorry, that was corny as hell. I made that up on the fly and I wish I would have never said it. The banks design structure in the market to lure traders in to stop them out before continuing in the direction that traders were looking to take the market. I'm sure you've had that happen to you before. Have you ever wondered why you set a trade, a buy limit, a sell limit, and then it comes up, stops you out, and then goes in your desired direction? You got stop hunted. It happens all the time. So knowing that these things exist, it's better to take advantage of them than to be taken advantage of. All right, so here, as you can see in the demonstration here, price was in a consolidation, and it was in this for some time only to break out. So this was a stop run right here, and then there's also, this is a stop run that I want to illustrate right here. So see, tons of liquidity building up right here, and this is an example if we're in a trending bullish environment. So if we've been trending up, we create a consolidation here, we create stop losses because people are trying to continue the trend inside of here, especially when this leg happens right here. A lot of people probably decided to buy right in here, and then they got stopped out coming into an order block at the same time. This makes this a high probability setup. This one should be easy to see, but do not overlook or underestimate the power of this model right here. We're going to be talking about this model a lot more, and you can find great trades using this concept alone. All right, obviously this is your Asian range right here. I was talking about this earlier. And a lot of times the Asian range will consolidate like this. And what did I say would happen? So there's liquidity building up at the top here and liquidity building up down here. But the stop run that we're focused on, if we're bearish in this example, this one would be for a bearish example. We're looking for a sweep of the highs and then a drop. And now, yeah, you could just get in here and trade this blindly once this stops. Once this takes all the stops up here. But the key to trading a stop run is honestly going down time frames and going really low, like all the way down to the 1 minute. That's the way I do it. We'll get there when we get there. I don't want to just start throwing 1 minute charts up yet. A lot of times the banks will have to take liquidity because they need more orders to pair their orders with as well. Let's look at some charts. All right, so here we are back over on TradingView, and right now I have the S&P 500 pulled up on the 1 hour, and as you can see, we already got an example right here where price is currently at when I opened it up. Well, not where price is currently at, but somewhere down here, right? Like this area right here. It should be screaming at you off the chart. But right here, this one is a little bit harder to see than some other ones, and this one would have been hard to buy into. I understand that. I didn't even buy into this one. I just see this one on the chart itself. So as you can see, we got equal lows. Ultimately, that's liquidity right here. There was also liquidity right here. that it sharply broke through and then rallied, right? So there may have been people buying from right here. They got stopped out. And as soon as it stops them out, that means smart money accumulated all their orders and then they go. Well, it doesn't necessarily mean that it accumulated all their orders. That comes from the accumulation. But there is accumulation in this as well. All right, dropping down to the 15-minute, I see another one right here. You could take it from this spot right here, or you could have even taken it from up here. I'm just drawing it from right here because I also took out that structure as well. And what did it do? This was a buildup of liquidity, and then you sweep the lows and move on to the upside. All right, so here we got a good example, and you can see we got relative equal highs right here. In this case, the market had been trending down. There's also liquidity down here for the market to aim for, so you got to realize that as well. So that could be part of your target. And price quickly snaps up, takes all this liquidity. It looked really clean, right? And then it falls. And I know I'm just showing you examples of stop runs right now. I'm not really showing you when and how to use them. And a lot of that's going to be reserved for the time and price lesson, because a lot of how to use stop runs comes from time and price. That's the best way to utilize them. All right, so for instance, we got another one here. This one is a little bit harder to see, but we got liquidity right here. Market clears through it. What does it go to? This is a little bit of a stretch, but on a 1 hour, I'm sure that this is probably a full order block right here, and that's where price moved into, and then it snapped away. So go back through your charts and look for these. Here's another one I see right here. This is a whole line of liquidity right here. This is liquidity, liquidity, liquidity. I just used the highest point right there. We run through it, and then we fall. And when we ran through it, what did we run into? So yeah, guys, I'm not going to sit here and bore you with looking at examples. The best thing to do would be for you to go back into your charts and look for this. Look for liquidity, look for equal highs and equal lows. Just look for liquidity in general. It doesn't even have to be equal highs or equal lows. And look for this stop run and look for big, sharp moves that happen afterwards. Look at what time they happen. Like for instance, I can see this one happened right around 7:30 in the morning, New York session. Forex, not for indices, but nonetheless. But alright guys, I'm going to get out of here. I'll catch you on the next one.